listen. So a stock ripped over 300% and I still didn't make any money on it. How is that possible? Alright, well, when a stock goes up that much, everybody gets this thing called FOMO, which is fear of missing out. And pretty much when I saw the stock pre-market, I didn't want to really hop in it, you know, because I thought it made the big run, and you know the train's already left, and now it's trying to find something else to trade. And as you guys can see, this stock literally went from a low of 240 and a high of 555. So this had an incredible move, but I didn't make any money on it just because I didn't trade it. Stocks that go up that much are very risky, and you guys see how fast it went up and how fast it went back down. So just as easily as it went up, it goes down. So when I saw this stock in pre-market, I just thought we had way too much downward momentum on it. You know, for those of you that traded it successfully, good job. But pretty much my go-to stock is something up only 40%, because I know it could rip all the way up to 200. And yes, it went up another 100% to 300 or to like 320, I believe, or even more. But it was just too risky for me. Look at my ear popping out. But it was just too risky for me, so I decided I'm just gonna leave it off. I don't want to trade stocks that are risky, just because just as easily as they went up, they're gonna go back down. And if I'm not 100% confident in my trade, I'm not gonna take it. So that is a tip for you guys, that when a stock is going up and up and up, and you say, oh my god, I'm gonna miss out if I don't hop into this. One of these times, it's gonna go south on you. Yes, you guys make money at you could make money on it, but I'm telling you, I've seen it happen to me and many other traders. Just as easily as this stock went up, it goes down, you know. And yes, I did get alerted on my trade idea scanner right here. I got alerted right there, and I saw pre-market. But the thing is I don't like to take risky trades. That's just me. I want to make sure my risk to reward is somewhat reasonable, you know. So my go-to is roughly, you know, 30%, 40%, and yes, even upwards of 60 or 70%, because I know it could rip to 100 or 200, you know. But when a stock's up 200%, you know, is it even really possible to, I don't know. But you know, it's a tip for you guys. If you guys, you know, find yourself in a situation, you know, during the day where stock's up 200%, you don't buy into it. It is the stupidest thing you can do, just because you will blow up your account. When a stock is gapping down, if you have any hard stops in, it's gonna go right past through it like it's not even there, because it's gonna skip your order. So, you know, you just got to be careful. You know, you got to have quick, smart trades. I keep telling you. And for me, I thought it was so much fun just sitting back, watching this stock go up. I'm thinking, oh my, you know, look at this. But right when it got up to 555, I pretty much said, if it makes it to $6, you know, this is gonna be a crazy move. I'm not hopping in it though, but it's gonna be a crazy move. And on the time and sales, I could see people keep buying at 550, 555, and I realized, okay, these people are, you know, must be new traders or investors, because they literally don't know anything about risk management. You know, they're buying the stock at all the way up at a doji at 555, and you know, it had 5 huge green candles right before it. But ooh, we just had an alert on our scanner. Let's pull it up real quick. So HMTA. Alright, let's see. Yeah. Since I have such a low float, sometimes I'll get alerted and it's just bogus. See, normally I only check it if it hits it multiple times, because then I know it's making some sort of crazy move. But you know, because it'll go ding 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 because it's hitting all those levels of alerts. So then I'll get notified, and then I can pull it up, and then I just look for some sort of pullback, and then I hop in. So that's like my go-to. I talked about it later in my other video, but so pretty much just the moral of today's episode is just be careful, because I know people are buying these stocks at crazy prices. You got to think. Imagine if you're buying a car, let's say, okay? So you don't want to buy it when the car's at, you know, its peak level, let's say. You want to buy a car at a lower level, and you want to have that car be worth something later. The stock is already worth the highest it's been, you know, in the past year. So why would you buy it? You know, maybe for quick smart trades like I was saying, but you know, for buying and holding for, you know, 30 minutes, it's just really crazy, guys. So and you're gonna lose your shirt. But yeah, so that's it though. Hope you guys enjoyed today's episode. If you did, I would greatly appreciate a huge thumbs up on this video, and depending on where you're listening to, you know, subscribe. If you're watching this on my podcast, you know, just subscribe, you know, just so you can get notified. And if you have any great video ideas for me to talk about, I love doing them. And you know, I do videos on stocks and my opinion on different CEOs or on news. But you know, if the stock is super cheap, or you know, I won't do it. But yeah, so just call out a stock that you want me to talk about, and I'll talk about it, guys. So that's it though. Hope you guys enjoyed today's episode. If you did, please drop a like on it, and remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week. Take care, everyone. Peace out.